Well, welcome everybody. Steven Sitkowski here. Glad to have you for our market insights. It is the 30th of March. Are we officially into spring? I don't know. Certainly feels like spring where I am. Hope that you are doing well. Let me go ahead and share my screen with you and we will get to it. Like I said, it is the 30th of March. For those of you who are fans of my puppy, if you've been on into one of my classes, old Charlie, he turned 1 year of age yesterday. Hard to believe. Got him when he was 9 weeks old, this little fur ball. And now he's a full-fledged smug dog who basically runs our house and in a lot of ways runs our life. And guess what? I wouldn't have it any other way. Want you to know that everything that we do here is for informational and educational purposes only. It is not intended as investment advice. Well, the stock market has been mired in a 5 week losing streak. The market is up today as I am recording this for you. But the market has had a tendency to be up on Monday, not so much the rest of the week. We'll see if we can break our streak. This is very much of a news-driven market, of course, being driven by whatever's going on at the time in Iran and what we're being told about that situation, which I sort of take with a grain of thought, a grain of salt. Seems to me like there's a whole lot of posturing going on out there. And I always find it interesting when leaders negotiate through the media, but clearly there is some of that going on. NVIDIA, my darling, it's off of its all-time intraday high by 21%, which technically puts it into bearish territory. Do not bet against NVIDIA. If you don't own NVIDIA and you felt like you missed the party, this could be the time, either to own the stock or maybe some longer term in the money call options on the stock. It'll eventually pull out of this slide. It's about the surest bet, even though there's no such thing as a sure bet on Wall Street, but it's the surest bet I can think of. Maybe Microsoft, put that in the same camp. Trump indicates that we are making progress with Iran. Apparently, we gave him a 15-point settlement, and he's also indicated that the new regime is much more reasonable to deal with than the one that we took out. So hopefully that's true. Um, I think that it is pretty imperative to his political career that he gets this done in the next couple of weeks. Otherwise, the damage to the reputation of Trump, which then trickles down into the midterm elections in November, I think are going to be irreparable. But if he pulls it together, we get an agreement. Maybe he comes off, looking like a hero. I think that's probably too big of a word, but I want to minimize loss of life. And, I'd probably feel different about this if we were defending ourselves because they came to the United States and attacked. That's a whole different deal. When you know that it's primarily a battle over, forget what they say, it's a battle over oil. Um, let's just say that I hope we come to a speedy resolution. I think that we will. I think it's in everybody's best interest. But I said that last week as well. And I'll keep repeating it until we get a deal. 10-year Treasury is down just a little bit. We want to keep that under 4.5%. I think above 4.5 is probably detrimental to the market, the equity market, which is already taken a hit. So that is in reasonable shape. And oil prices, they're over $100 a barrel. For West Texas Intermediate crude, that's a giant number. When I went to fill up my tank, it was almost $100. I remember, those days. And of course, everything I drive requires top grade fuel because it's all big engine, even though I drive it like I'm an old man. Um, Somehow it is psychologically satisfying to know that if I ever really stepped on it, it would go vroom vroom. But I'm like, yeah, okay. And I always think about people where, the price that they're paying at the pump has a lot to do with their ability to put groceries on the table. So, for so many reasons, we need to get past this. We need to get oil going back through the Strait of Hormuz. We need to bring oil prices down. It won't happen instantly, but it'll happen over time. The estimates that I'm seeing, it'll take about 6 months to normalize. There are some people that aren't going to be able to deal very effectively with the economic pain for the next 6 months. So, fingers crossed. Here's the market scoreboard. If your kid brought home a report card that looked like this, you'd probably restrict them from watching TV or playing video games. Year to date, the Dow is down 6%, S&P 7%, the Nasdaq almost 10%. The worldwide market's only down 1%. And look at oil. It's up 74.6% this year. It's just a couple of months. That's what war does. Microsoft shares have been struggling. The shares are down 24% since the start of the year. You want another place to put money that's got relatively low risk? I would go Nvidia and Microsoft. Those would be probably my two safest picks for you at the moment. Not so Magnificent Seven. Everything in the Mag 7 is being sold off. Apple's been hit the least, um, but you can see they're all headed down. Microsoft leading the charge this year, down 24%. I also think Meta's a good buy. They're down 17%. Tech is getting cheap on a relative basis. This is based on forward PE valuation premiums. So you can see, I mean, the last time they were this cheap was back in 2019. This is your chance. If you've been on the sidelines, this is your chance if you felt like, you missed it and you watched tech go up, 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 and you're like, darn, I wish I would have got in. Here you go. Don't miss it again. Top software picks. So this is according to JP Morgan, which has a pretty robust research department. 19 stocks to buy amid the AI disruption fears. So they figure these are pretty resilient. There you go. On the tech and enterprise software, there's Microsoft, ServiceNow, Twilio, o- Okta. I'm not familiar with them. In the cybersecurity space, Palo Alto Networks, CrowdStrike, Zscaler, Checkpoint, SentinelOne, and Netscope. And for data and industry software, Snowflake, Datadog, Viva, Guidewire, CoStar, Tyler, JFrog, SailPoint, and Q2. So that's the picks from JP Morgan. Returns during times of war. The average 3-month rally from a correction. So this would be war and some other things that were going on. It starts with the Korean War. You see, we had a drawdown of 15%. So this goes back to 1953. After 3 months, up 9%. After 6 months, 17%. So let's just go to the averages down here at the bottom. So you can see after 3 months, this is after we've had a correction, 10 to 20% drawdown. After 3 months, up 15%. After 6 months, up 24%. So keep faith. Markets always come back. You've heard me pound that gavel more than once. Fear greed index, we are in extreme fear. We're down to 10. I mean, that is so incredibly low. But, we've been in extreme fear now for a while. I understand it. Sometimes I disagree with this index, feeling like, the average respondent is overreacting. Not now. Let's take a look at today's heat map. There you have it. So, all in all, not bad so far today. But again, Mondays are typically pretty good. And then we kind of do a slide. Look at Micron. Micron just keeps, that's another one, man. Put it on your watch list. When that thing finds a base, did record breaking earnings announcement last quarter. And the thing has just dove ever since. So, anywhere. So, we've got software application. So, those stocks doing great today. Semiconductors, not so much. Um, Micron down, AMD, Intel down. Nvidia is kind of flat. You can see that pretty much everything the consumer defensive is up. Of course, oil is up. Utilities are up. Basic materials are up. Meta's up a couple percent. So let's see for the last week what that has looked like. That's a whole different story, my friends. Money came out of the growth side on the left, which is where we have technology and consumer cyclical. Cyclical means does well when the economy is doing well. And the money has flowed over to the right-hand side, which are the defensive, right? Consumer staples, utilities, energy, materials. So, what about year to date? Here's year to date. Same picture. So it's been pretty consistent because pretty much all year, what have we dealt with? This damn war. Yep. Sector performance year to date. Um, S&P is down 6.66%. Energy sector's up 40%. And still, one, two, three, four, five, six of the 11 sectors are up. What you see is it's all top heavy, right? Energy, which is not a big part of the S&P 500 or the overall market, right? It's a little piece. The big piece is technology, which is down here and it's off, over 12%. So that's what that looks like. Chances of a Fed rate cut now, we don't have anything in the forecast until back until September of 2027. I think this will change. Um, right now, there's no rate cut forecast because with higher energy prices, you have higher inflation, less chance of the Fed willing to cut. Let's check the charts. So I'm going to check a couple things. First, we'll do the S&P 500, which we do, but I also want to and I may do this regularly, check in with the VIX, which is the volatility index. Also known as, by the way, here's Micron. I see it's up here. I'm just waiting for this thing to hit. This might end up being that level of support. No guarantees, but at least there's a chance here. So we're at 331. On March 18th, 2 weeks ago, we were at 464 and it hit a high of 471. And all it did was provide an incredible earnings announcement. So that's Micron. Let's look at Microsoft. Look at that. So there's no support on here at the moment on a 6 month chart. Why don't we go out a year? So now at least we've caught up to some levels. So we could be. Now, I think this is a good entry point. If you're patient, give it some time. And how about NVIDIA? Let's take a look at it. Okay. So it's kind of sitting on, this is a 1 year chart, kind of sitting on this level where it's got lots of company. So I like that level. Yep. I may even short some puts on that and look to acquire more shares. Okay, so let's go to the SPX. Go back to a 6 month chart and the S&P 500. There you go. So now we're all the way down here, and you can take technical analysis and pretty much throw it out when you're in a news-driven market like this. But that's where it sits. How about the VIX, which is the volatility index on the S&P 500? We're up to 30. That is a very elevated level. Now, generally, and just take a look. See, it goes up and it comes down, goes up, comes down, goes up, comes down. What's going to cause us to come down? Positive news about Iran. Until that happens, kind of all bets are off. So that's where we sit, my friends. I don't think any of that is news to you, is it? You probably had all that figured out. So we'll sit back, wait, fingers crossed that we get some good news out of the Middle East. So I'll be with you for good or for bad, same time next week. Have a great one. Bye for now.